In today's video, I'm gonna show you guys how we could use order flow in order to get a better entry. How do we know the market as it was coming up was likely gonna start coming right back down? As we come over real quick and we look at this on a 5-minute chart, right here is the white line. This is the line in the sand where I basically say, all right, something's up. If we start coming back down below this area, prices are likely to go lower. And then we come over and use the volume profile and look at, okay, where are some logical targets? Well, if you want to use a basic structure, you can look at where we broke out of this market from. You can see right down here from that breakout point to where I'm going to show you guys is roughly 72 points. If you actually wanted to run and hold price all the way down towards the developing point of control, which would have been right around 132 points, then we would have been able to do that because once we enter the market, we could then put our stop loss at break even. So now let's come over and take a look at bookmap real quick. And this is how we're going to be monitoring the order flow throughout this day. And what I want you guys to see is right here, right around 2,100, you can see that there are 77 contracts resting there. The horizontal lines, the darker the red, means the more resting orders there. So since price is below that line, those resting orders have to be sell orders. Now, the one thing we don't know and what bookmap or any other order flow tool does not tell us is, are these resting orders to exit a trade, or are these new traders ready to engage on the sell side of the market? That part of the equation we do not have. Now, I want to scroll this over real quick, and I want you guys to see what happens as we come over and we start trading into this level. You can see the market, big buyer steps in. One, we can see the volume down here. But then look, a big vertical movement up on the bubbles, bam, right back down. And then we start marching right back up. But I want you to pay attention very closely to a couple things. As we start coming back up, look at the size of the bubble over here. Then look at the bubbles over here to the right. Are they bigger or are they smaller? You might say, Mike, what in the world does a bubble have to do with price? I trade candles. As we're looking at the bubbles, the larger the bubble means more aggression to that side. A green bubble would be to the buy side. A red bubble would be to the sell side. So as we came pushing up, you've seen all the aggression over here. Then as the market comes back to retest that area, you can see the aggression just simply does not match what we had previously. That's clue number one. The market is likely going to go ahead and start to roll back over. We'd also want to go ahead and mark off where this prior resting liquidity was at, even though we have taken it out, because now if we start coming back down below that price point, guess what? We are likely going to go ahead and go lower. So as we come over and look at this chart right here, we can see instead of waiting on the 30-minute chart for this candle to close and maybe break the low, we can get in way before that. We can actually get in higher than the opening price and much higher than the closing price as well. Then as we come over and start looking at this on the 5-minute chart, what do we have before we started taking the liquidity? Keep in mind, this white line right here was that same liquidity level that I just shared with you guys using bookmap. So one, we have the 9 count saying, hey, there could be exhaustion in the market. Then we see that liquidity being taken, and then the market starts coming back down below that price point. From that point on, guess what? We can then look to go short, because if we cannot hold above where that big seller was in the market, what do you think is likely going to go ahead and transpire moving forward? If you said go lower, you would be absolutely correct. Now, we had a couple different situations that we could target. One, we could target this structure breakdown point. Two, we could simply target the developing point of control. Or if you want to keep it simpler than that, we could have grabbed the Fibonacci retracement tool, measured from the swing low at 10 a.m. all the way up here to the swing high. Notice anywhere between the 50 and 61.8 fib level would be a very logical target. Now, if we go ahead and we look from that white line all the way down to the 61.8, that would be 135 points. Now, just to put this in perspective for you real quick, 135 points on the NASDAQ. The NASDAQ's $20 per point. We times that by 135. That move would be worth $2,700, assuming you got every single piece of that move. And we know in the market, we're not going to get the whole entire move. Now, what really makes this trade very special as well is look right up here and then look, if we were to have a stop loss, where could a stop loss likely be? If you want to be more conservative, we can go all the way up here above the recent swing high. So for a stop loss, we can have a stop loss of roughly 30 points with a target of 135 points. This is one of the clues. So if you're not using order flow tools, then you know what? Highly probable that you would not have seen this key level and known that, hey, if we cannot hold above that level, prices are likely going to go lower. Now, if you guys want to make sure you get the best deal on bookmap, use the links in the description box down below. And if you want to see another example of pinpoint entries using bookmap, make sure to watch this next video right here.